Hello everyone, welcome in economics class. Hope you are staying healthy. So today we will do expenditure method to measure national income. This is part 3 of my video, that is measurement of national income. So this video is very important for JRF, UGC Net, economics and commerce candidate. So let's start. This method measures national income as a sum of final expenditure incurred by household, business, government and foreigners on our country product. Listen carefully. This method measures national income as sum of final expenditure incurred by household, business, government and foreigners on our country product. As we know, expenditure of the someone is income of others. If these people are doing expenditure, that is their expenditure. What it's the income of someone. For example, if I buy this pen, I have pen in my hand. If I buy this pen, that is my expenditure because I paid something to receive it. Na? What? It's the income of the shopkeeper. Similar, by expenditure, we can know national income of our country. Now, I will make clear with the help of these components. Components of final expenditure. That is private final consumption expenditure, government final consumption expenditure and gross domestic capital formation. That is divided into two parts. That is gross fixed capital formation or inventory investments, or last is net export. Don't bother about it. This is not very difficult. So I will make you understand these all the components one by one. Okay. So let's start. Okay. I have first component, that is private final consumption. It includes expenditure incurred by household and private non-profit institution on all type of consumer. For example, TV, cooler, AC, mobile, etc. Listen carefully. It includes expenditure incurred by household and private non-profit institution on all type of the consumer, for example TV, cooler, AC, mobile, etc. Okay. Then second is government final consumption expenditure. It includes the expenditure incurred by the government on various services. These services given by government like defense, law and orders. And then third is gross domestic capital formation. That is divided into two parts now. First is gross fixed capital formation. Then second is inventory investment. What's the meaning of gross fixed capital formation? Listen carefully. It's a meaning expenditure on fixed assets. For example, expenditure on machine, equipments, new plants. Then inventory investment. It measures change in stock of raw material, finished goods, semi-finished goods. So we can know how much stock we buy or add in that particular year. Okay. Then fourth is net export. What are these? It is difference between x minus m. What is x and what is m? X is value of export and m is value of import. When we subtract these value of import and export, we get net export. Okay. At last, when we add all the components of final expenditure, we get national income. We have all the components now. Private final consumption expenditure plus government final consumption expenditure, gross domestic capital formation. This is plus net export. Then what do we get? We receive at the last by adding these all GDP MP. What is that? That is gross domestic product at market price. MP is a market price. Okay. From this we receive our national income from GDP MP. From GDP MP, when we subtract depreciation and net indirect tax, we get NDPFC. What is NDPFC? We have done now net domestic product at factor cost. This is, so when we add net factor income from the abroad in this NDPFC, what we get? NNPFC, that is our national income. What we call it? Net national product at factor cost is equal to national income. Hope you understood. Thanks.